Hello everyone and welcome back to Explain the Charts, your go-to channel for in-depth technical analysis and market news breakdowns. Today, on October 14th, 2025, we're diving deep into Intel Corporation, ticker symbol Intel. The stock has been on an absolute tear recently, and there's a whirlwind of news creating both bullish and bearish arguments. We're going to sift through the headlines and then jump into the charts to see what the price action is telling us. First, let's talk about the news driving this volatility. Intel has seen a flurry of activity, with its stock closing yesterday at $37.22, up over 2% on the day. News reports highlight a massive 88% surge over the last 6 months, which has caught everyone's attention. A major catalyst for this optimism appears to be the company's strategic restructuring under CEO Lip-Bu Tan. This includes significant cost-cutting measures and the recent sale of a majority stake in its Altera business to Silver Lake for a hefty $3.3 billion. This move allowed Intel to lower its 2025 operating expense forecast, signaling a strong focus on financial discipline and profitability. The market has reacted very positively to this, with investors showing renewed confidence in the company's direction. However, it's not all clear skies for Intel. Some analysts, including a notable downgrade from Bank of America, are warning that the stock may have climbed too far, too fast. There are persistent concerns about fundamental challenges, including stiff competition from rivals like NVIDIA and TSMC. Key strategic issues, such as an AI accelerator gap and the pace of foundry progress, are being cited as significant risks for the company's long-term growth. So we have a classic battleground scenario: strong positive sentiment from restructuring versus deep-seated concerns about competitive positioning. Now let's see how this narrative has played out on the price chart. Looking at the daily chart for Intel, we can see the stock's incredible journey over the past year. We saw a 52-week low way down at $17.665 back in April of this year. From that low, the price began a slow and steady recovery, building a base for several months. There was a significant period of consolidation between roughly $19 and $25. This sideways action indicated that the market was trying to find a fair value after a period of intense selling. Volume during this time was relatively stable, suggesting accumulation by long-term investors. The price was essentially in a holding pattern, waiting for a catalyst to break it out of this range. That catalyst arrived in mid-September. If we zoom in on the action from September onwards, the story becomes crystal clear. Right around September 15th and 16th, when the news of the Altera stake sale and cost-cutting measures hit the wires, the stock exploded. You can see this massive price gap up on September 18th, where the stock jumped from a close around $25 to open near $32. This was accompanied by an enormous surge in volume, confirming the conviction behind the move. That news fundamentally shifted the market's perception of Intel's financial health and strategic direction. Following that gap, the stock didn't look back, embarking on an incredibly powerful uptrend. We can see a series of higher highs and higher lows, which is the definition of a healthy bull run. This powerful rally took the price from the mid-$20s all the way to a 52-week high of $39.65 just last week on October 10th. Now, let's identify the critical price levels we need to be watching. The most obvious level is the recent high of $39.65, which now acts as a major resistance level. A convincing break and hold above this price would signal a continuation of the uptrend and could attract more buyers. On the downside, we have our first layer of support around the recent lows of $36.30 to $36.50. If that level fails to hold, the price could see a more significant correction. A key area to watch would be the top of that massive gap up from September, right around the $30 to $32 zone. Many traders will view that area as a major psychological and technical support level. A pullback to test that area, if it holds, could be seen as a very bullish buying opportunity. Below that, the previous resistance in the $24 to $25 range would become the next major support zone. Let's switch to the 1-hour chart to get a better look at the most recent price action. Here we can clearly see the peak at $39.65 on October 10th. Following that peak, the stock experienced a sharp pullback over the course of the trading day, indicating significant profit-taking at those highs. The price fell all the way back down to the $36.30 area. However, yesterday, on October 13th, we saw a strong bounce off that support level. The price rallied throughout the day, closing near the session highs at $37.22. This bounce is a positive sign for the bulls in the short term, showing that buyers were willing to step in and defend that support level. The question now is whether this is just a dead cat bounce before another leg down, or the start of a new push towards the highs. Drilling down even further to the 15-minute chart, we can analyze the character of yesterday's bounce. We can see the stock gapped up slightly at the open on October 13th and established an intraday uptrend. Volume was solid on the up moves, and the pullbacks were relatively shallow. The price managed to hold its gains into the close, which is a sign of short-term strength. For day traders, the key levels to watch today would be yesterday's high around $37.51 and the low around $36.28. A break of either of those levels could dictate the intraday momentum. So, putting it all together, what should we be looking for? Intel stock is at a fascinating crossroads, fueled by positive strategic news, but shadowed by long-term competitive risks. The chart has confirmed a major trend reversal to the upside, initiated by the news in September. The immediate trend is bullish, but the recent sharp pullback from the 52-week high warrants caution. Let's recap the key levels to watch. Resistance is firmly at $39.65. Immediate support is at $36.30, with a much stronger support zone located between $30 and $32. Now for some potential scenarios. A bullish scenario, which I'd give a 40% chance in the short term, would involve the price consolidating above $36 and making another attempt to break the $39.65 resistance. Continued positive news about their foundry business or new AI chip developments would greatly increase the likelihood of this outcome. A bearish scenario, with perhaps a 35% probability, would see the price break below $36.30 and start a deeper correction. This would likely be triggered by a broader market downturn or negative company-specific news, potentially leading to a test of the $30 to $32 support zone. The most likely immediate scenario, at about 25%, is a period of sideways consolidation between $36 and the $39 resistance. The market may need some time to digest the massive recent gains before committing to a new direction. Keep an eye on upcoming earnings reports and analyst commentary, as they will be critical in determining the next major move. The AI accelerator gap is a key narrative, so any updates on that front will be heavily scrutinized by the market. That's our in-depth look at Intel. We've covered the news, the long-term picture, the recent rally, and the key levels you need to have on your radar. To summarize, the critical resistance is the recent high of $39.65, and key support lies around $36.30. Thank you for watching Explain the Charts. If you found this analysis helpful, please hit the like button, subscribe, and ring the bell so you don't miss our next video. Please remember, this video is for informational and educational purposes only. It is not financial advice, and you should always conduct your own research before making any investment decisions. Trading stocks involves risk, and you should consult with a qualified financial professional. Thanks again, and we'll see you in the next one.